My name is Ron Brown. I've been using HGSI investment software for approximately 16 years. I've seen the software grow from a pretty basic program to a program which is extremely powerful if used properly. Now, the thing about HGSI, it can be adapted to many different styles of investing or trading, and I use it as a top-down tool. In other words, I begin at the top down, and then I move down from markets to sectors to groups, and ultimately to stocks or ETFs to determine what I want to trade. Now, my approach to trading is pretty much based upon assessment of risk before I take a trade. That's often an overlooked aspect of trading. When new traders come to the market, they're interested in entries. They give very little thought to the amount of risk that they're assuming when they get into a position. I was the same way back in 1983 when I began getting involved with my own investments, and I just assumed that if I bought a stock, it would go up. And I've learned over the years, of course, that that's not the case. So how do you protect yourself? You protect yourself by determining your risk before you enter a trade. So I'm going to talk a little bit about risk assessment, and then I'm going to discuss how I use the software. I primarily use two programs, HGSI Investor, and I use Thinkorswim for my trading platform. I could get along without Thinkorswim because there are other alternatives out there, but I really don't think I could get along without HGSI. Now, these are a few things that I want to discuss. As I said a few seconds ago, that my approach is about risk-based trading. I also mentioned that in the past I would really pay little attention to this. I would just buy a flat number of shares, not have a stop in place, and just assume that everything would work out. And oftentimes it did, but more often than not it did not. So what I do is I base my percentage risk based upon the amount of capital that I have. Position sizing is also based upon the percentage of risk, and these calculations are done in a spreadsheet that I created for my webinar students. I primarily trade trending stocks. I try to enter stocks coming out of a contraction phase rather than an expansion phase, and as I go through these videos you'll see what I mean. When stocks are expanding, risk becomes greater. When they are coming out of a contraction or a consolidation phase, that is the best time to purchase them because your risk is much lower. You'll have tighter stops, and also you'll be able to purchase more shares. I prospect using HGSI, and I use trends based upon exponential moving averages. I'm heavily involved with volume price analysis, or VPA, and VPOC, which is volume point of control, and these will make more sense to you as I get into the videos. Top-down analysis is critical to determine where the money is flowing in the market. With top-down analysis, my approach is primarily technical, but fundamentals are concerned, and the reason I make that statement is that if you adhere to an investment philosophy, for example, CAN-SLIM, your criteria for selecting stocks is very well defined, and that's fine because some of those stocks go on to become the biggest winners in the market. But on the other hand, if you adhere to that philosophy, or a restrictive philosophy, you're going to miss out on all kinds of group rotation in the market. For example, in early 2016, the precious metal and gold stocks started moving, and their fundamentals were horrible. Same thing for the steel stocks, and they turned out to be some of the biggest winners for the year. So HGSI is the only software that allows me to perform these tasks the way I want to do it. There are other software programs out there where you can get a feel for top-down analysis, but nothing like HGSI. I recommend beginning with education, and I'm going to show you a few books that have influenced me. I've read a lot of books over the years, and these are the books that I often come back to. Now, this statement here, you wouldn't risk your money in other endeavors without research and educating yourself, so why throw money at the stock market and hope for the best? Yet people do it every day. I did it for many years, and then I finally came to the conclusion that without risk control, it's kind of a fruitless endeavor. If you control your risk, you can enter a trade and you know the amount of money that you can lose. Now, there are exceptions, of course. You can get in a situation where a stock or an ETF gaps down and you'll lose more than you wanted to. But if you do this consistently, time after time, the odds are in your favor. Now, these are a few books that I recommend that you read if you're interested in volume price analysis or finding huge winners in the stock market. The first book that I've recommended, and I've recommended to many people, is Anna Culling's book. Now, Anna's from England. She's a well-known trader. She's primarily a Forex trader now, but she's traded everything. Anna's big advantage was that she learned volume price analysis at the beginning, so she was not distracted with all of these, or distracted by all of these other indicators and systems that are out there. She learned to read the tape early on, and this whole thing about stock trading is learning to read the tape. I'm going to quickly go to this page right here because these are Wyckoff principles. I'm sure all of you have heard about Richard Wyckoff from the early 1900s, and he had a long career on Wall Street. He had a publication called the Magazine of Wall Street, and at its peak it had 200,000 subscribers, which was huge for that point in history. He based his trading upon these three principles: the law of supply and demand, the law of cause and effect, and the law of effort and result. And Anna has based her trading upon the Wyckoff principles. You can buy these books, or this book in particular, for about $5 on Amazon or Barnes & Noble if you get the digital edition. Now, Trade Like a Stock Market Wizard is a book about super performing stocks. I recommend that you read that. The Perfect Speculator is also about stocks that go on to gain huge rewards for the holders of these stocks. These are somewhat similar about their, or I should say about the type of stocks that they're prospecting for. But Trade Like a Stock Market Wizard is much more detailed, of course. And here's a couple of inexpensive books by a guy named Frank Marshall. Expert Trading, 93 Lessons of Richard Wyckoff, and the Best Trading Lessons of Jesse Livermore. I base a lot of my trading based upon what I've learned from these two traders. They are the first two traders, I shouldn't say first, but they were the early leaders in a scientific approach to the market where they considered both price and volume. Jesse Livermore was a top-down trader. He paid a lot of attention to groups, and Wyckoff did the same thing. Both very successful in their own right. In fact, Jesse Livermore is probably the greatest trader that ever lived. Unfortunately, he was a plunger, and he ultimately committed suicide, but he made a fortune back in the early 1900s, and he spent a fortune also. Mark Minervini is, I believe he was a high school dropout, if I remember that correctly, and he went on to make a fortune in Wall Street by buying and holding the strongest stocks. These are the type of stocks that we're looking for. And Brad Kateshkor, I believe that's how you pronounce his name, he based this book upon interviews with a very successful momentum trader who did not want to be identified. The subject of the book, or the subject of the methodology, was a trader who was dying of cancer, and he wanted to get this information out to the public before he passed on. All very interesting reads. Now, there are a lot of people out there selling educational courses. I do the same thing, but I base mine up on HGSI Investor and risk control, and my fees are very reasonable compared to a lot of these courses that are out there. You can spend a fortune, but if you have the initiative, if you like to read, if you like to study what's been done before, all you have to do is buy the books, apply the principles, and you're well on your way.